Welcome to our daily Forex market analysis, and this is for trading on October the 29th, 2019. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, so as usual, we'll start off by taking a look at our economic news here. So in terms of news, not a ton of important stuff. We did have a speech from Draghi and a parliamentary Brexit vote here, which got rejected. So basically, Prime Minister Boris Johnson was actually looking to call an early election in December, on December 12th, and that hasn't gone through. We haven't really seen much of a reaction as a result of that. EU has allowed, or EU is allowing, an extension for Brexit, so it won't, there will be no hard Brexit on October 31st. They have agreed to January 31st as the extension. So from that perspective, there wasn't much of a reaction here. Now, going into tomorrow, Tuesday here, again, not a big day for news. We have news coming on later in the week here, but tomorrow we have Reserve Bank of Australia, Governor Lau speaking, and then we have consumer confidence numbers as well as pending home sales and pending home sales numbers out of the US. So these numbers, if they come in below expectations, will be negative for the US dollar. We also have Australian CPI, which is inflation numbers. Again, if the numbers come out below expectations, that would be negative for Australian dollar or vice versa. Another thing to keep in mind is we have FOMC this week, and going into the FOMC, we are expecting an interest rate cut from the Fed, and as a result of that, we have seen that the equity markets are going up, and as a result of that, we tend to see the safe haven assets drop. So Japanese yen, Swiss franc, gold, silver, those assets drop. So that's pushing the markets up, the expectation that the interest rates will be cut. And also we are seeing this positive or optimism out of the US and China trade deal. So there was comments that came out, or President Trump tweeted saying that US and China are likely to sign an initial deal fairly soon here. So that's positive news for the markets, and that's why we are seeing the risky assets going up. And as well, Fed has started purchasing securities. So they have started their asset purchase program once again. They're not calling it quantitative easing, but it's still the same. They're purchasing short-term treasury bills. So as a result of that, it's pushing the markets up as well. It's creating more liquidity in the system. So our stock markets are going up a lot, and as a result, the safe haven assets are not doing so well. So that's what is going on right now. So going into our FOMC meeting later in the week, we could see extra optimism because the Fed is likely to cut rate, but then we could see change or a shift in the market. So just keep that in mind. We'll talk about that as we get closer to that date. But leading up to that, there's got to be a build-up in terms of the optimism. So all of this will get priced in, and we could see the stock markets go up even more and safe haven assets drop as a result. So that's something we have to keep in mind. So let's go on to our charts here. We'll start off by taking a look at our euro dollar here. So as we can see, a price has gone up today, but we are into support resistance at this point. So keep this in mind. It is a bullish candle close, so we could see price go higher. The next target here would be 1.1140. But if price stays below this 1100 level, it's likely to drop. So at this point, a bias is bullish, but if price stays below 1.1100, I would look for it to drop. So this is where it is. If it doesn't break the resistance, this one could drop. And if it does break the resistance, I'm looking for it to go into the next level at 1.1180, and then it could also go further. So any interest rate cut is bad for the currency. So usually we see currencies drop. So US dollar could drop as a result of expectation of getting an interest rate cut. So just keep that in mind. So this one could go higher. So for now, bias is bullish. But with caution. So next target is 1.1140. Second target is 1.1165. So bullish bias here for euro dollar. But like I said, if it doesn't break through this resistance at 1.1100, I would look for it to drop. Pound dollar here, this one as well is holding above this previous support resistance level. We do see for the last 3 days, price has just been stuck at this level here. So at this point, we do have a small bullish candle close. So it's at an interesting point. So as we can see here, there is support resistance right into here. So price is into resistance coming all the way here, but is also into support. So it's just going sideways at the moment. So it is neutral bias here for pound dollar, but there is some bullishness in there because overall the trend is to the upside. It's still holding on to those gains that were made after all that positive news came out about British pound or Brexit, and as a result it's still holding on to that. So overall bias is still bullish. What I'm looking for here is bias will be bullish or neutral here for pound dollar, but if it breaks through the high, it is very likely to go higher. So in this case, I will look for price to go to 1.2950 and then potentially even higher. However, if price doesn't break through this resistance at 1.2880, this one could also drop here. So same thing as euro, if it doesn't break through today's high, then we could see a drop here as well. For now though, this is neutral to bullish for pound dollar. Aussie dollar here, this one is looking bullish as well. Price is being held above this previous support resistance level here. As we can see, this resistance is now acting as support. We do have a bullish candle close. So I will look for price to go up, back up here towards the high. So at this point, bias is bullish. Next target is 0.6850, and above that, we are looking at 0.6880. So bullish bias here for Aussie dollar as well. New Zealand dollar, this one is neutral. We have a completely neutral candle close for the day. So as a result of that, we could see this one go in either direction. But if it holds above this previous support resistance level, basically if it holds above today's daily low, which is at 0.6330, it's likely to go back up as well. So the bias though is neutral, but as long as it holds above the low of today, I will look for it to go higher. Dollar CAD, this one is bearish. We do have a bearish candle close here. So looking for price to drop further. Our first target here is 1.3030 and then 1.300. So bearish bias here for dollar CAD. Moving on to our commodities here, looking at silver, we have a bearish candle close here. So looking for price to drop further. First target is 17.45, and then below that, looking at 17.15. So bias is bearish for silver. And a lot of this has to do with the expectation that Fed is going to cut rates, because when Fed is cutting rates, it's bad for the safe haven assets like gold and silver, and it's good for the stock market. So which is what we are seeing right now. So for gold here, bias is bearish. We have a nice bearish candle close here. So looking for it to drop further. In this case, the target is, I will look for a bit of a pullback and a drop. 1480 is the first target, and then 1458 is the second target. So bias is bearish for gold. Oil here, this is also looking bearish. We see price went into the support resistance level here at 57 or just below 57. And then we have a bearish engulfing candle here. So looking for price to drop. Now do keep in mind, we have support here as well. So we do need to see a break below the support for this to continue. But bias is bearish. First target is 54.80, and then second target is 54. So bias is bearish for oil. Copper here, copper hasn't really done much, but at this point, this one I would say is neutral because we are seeing a compressed move here. So even though it looks like it's going higher, but hasn't really made much progress here. And as we can see, there's a lot of support resistance into this area. So if it doesn't break above this high here at 2.65, this one could drop. So it is bullish, but with caution. So I would say neutral here because I think we may be at that turning point for copper. So as long as it stays below 2.65, I will look for a drop towards 2.60 for copper. Bitcoin here, Bitcoin is interesting. We saw a big move off of the support level here, all the way almost into 10,000 or 9,900, and then we are seeing a drop. So today's candle close is bearish. We have this big gap here. So looking for price to drop towards 8,700 here. So bias here is bearish, but there is support resistance level at 9,080. So what we could see here, so I would say, first of all, bias is bearish, but if price does not go through this level, it could go back up. So watch out for that. So we're looking at $9,080 as the support, our support point for this one. If it doesn't go through that, this one could go higher. For now though, bias is bearish. So 90.80 is the first target, and second target, if it does go through this, would be 8,700, and this is where we could see price come into support here. So first target 9080, second target 8700. So bearish bias here for Bitcoin. S&P 500, this has been very bullish here, especially with the expectation that Fed is going to cut rates, as well as markets are getting support from Fed buying treasury bills here. So bias is bullish here. Price has actually broken through this resistance that was all-time high. So right now market is at all-time highs. It has broken through this big resistance level and gone through it. So looking quite bullish here. So I will look for price to continue further here. 3050 is the first target, and then 3080 is the second target for S&P 500. So bias here is bullish. Nasdaq here, this one is also looking bullish. We have gone through this resistance here as well, and this one is still looking bullish here. So we are at 8,100. So the next target here is 8,150 and then 82. So bias is bullish for Nasdaq as well. Again, like I said, there's a lot of support from the Fed right now, them buying the treasuries, as well as the Fed expectation to cut rates is pushing the markets up. So till the rate statement comes, I'm expecting it to basically go up for the next couple of days. And once the rate statement comes out, it will really depend on the commentary from the Fed. So Fed, once they say that they are done with their adjustment or cutting rates, then we could actually see the markets decline, because that will be negative for the markets. So it really depends on how they phrase it. But I'm not expecting the Fed to really open the gates for further cuts. They are likely to close off this whole rate cut scenario, and from here on, they will likely watch to see how markets behave, and then make any adjustments. So for now, because of the expectation of Fed rate cut, US-China trade comments are coming out really positive, as well as Fed buying treasuries. All of these are positive for the equity markets. So we are seeing the equity markets going up right now. So Nasdaq bias is bullish. 8,150 is the first target. 8,200 is the second target. And here, let's take a look at another one that I have not been looking at, but it is also important. And this is our Dow Jones here. So right now we are into resistance, but we have a bullish candle close here. So looking for price to go higher, 27,320. So 27,320 is the target. So bias is bullish here for Dow Jones as well. Nasdaq here, this one is also looking bullish. Overall, equity markets doing really well. And 13,000 is the next target here for DAX. So bias is bullish. Now, FTSE here is also bullish. It is into resistance, so just be careful with that, because if it doesn't break through, it can come back here. But it is looking bullish. Next target is 73.80. So bias is bullish for FTSE as well. Last but not least, we are looking at Nikkei here. Nikkei, we have a nice solid bullish candle close here for this one as well. Next target is 23,000. So back into this support resistance level here. So bias here is bullish for Nikkei as well. So that's it for today. You guys have a great trading day, and I'll be back again with our daily market analysis tomorrow again. Bye for now.